Hey everyone, and welcome to the channel. Today we're diving into the world of investing with the legendary Warren Buffett. You know, the guy who's built a fortune by being incredibly smart about where he puts his money. Now, most of us aren't aiming for quite the same level of wealth as Buffett, but that doesn't mean we can't learn from his wisdom. The question we're tackling today is, if you had $10,000 to invest, what would Warren Buffett recommend? Here's the thing up front, there's no guaranteed path to riches. But Buffett's approach focuses on building wealth steadily and safely over the long term. So if you're looking for some quick get-rich-fast scheme, this might not be the video for you, but for those who want to invest wisely and watch their money grow, buckle up. Buffett's $10,000 strategy. All right, let's get down to brass tacks. Buffett actually offered some advice on this very topic at a shareholder meeting. Here's the key takeaway with $10,000, he suggests focusing on smaller companies. Now, this might seem counterintuitive. Why not go for the big names, the established giants? Here's the reasoning: with a smaller amount of money, you have more flexibility to explore companies that might be overlooked by bigger investors. I think of it like this: imagine you're at a yard sale. Everyone's rushing for the fancy furniture, but you spot a dusty box filled with old toys. You do some research and discover they're actually valuable collectibles. Imagine that's kind of the idea with smaller companies. There's a chance they have hidden potential, offering the opportunity for higher growth. Understanding the why behind Buffett's advice. But why exactly smaller companies? Buffett emphasizes two main reasons. Undervalued, potential larger companies tend to be well researched and priced accordingly. Smaller companies, on the other hand, might be flying under the radar. This means there's a possibility they're undervalued, offering a chance to buy in at a good price and see your investment rise as the company's true worth becomes more recognized. Focus and research. With a smaller pool of companies to consider, you can dedicate more time and attention to researching each one. This allows you to get a deeper understanding of their business model, their strengths and weaknesses, and their future prospects. Important considerations before you invest. Now, before you rush out and dump your $10,000 into the first small company you find, there are a few crucial things to remember. Do your research. Buffett is a big believer in thorough research. Don't just take someone else's word for it. Read the company's financial statements, understand their industry, and analyze their competitive landscape. Invest in what you understand. Only invest in companies you can somewhat grasp. If their business model goes over your head completely, it might be best to keep looking. Long-term mentality. Remember, Buffett's strategy is all about long-term growth. I don't expect to get rich overnight. Be prepared to hold your investments for years, even decades. Diversification is key. Even with smaller companies, don't put all your eggs in one basket. Spread your $10,000 across a few different companies to minimize risk. Wrapping up. So there you have it. While there's no guaranteed path to riches, following some of Warren Buffett's wisdom can be a smart way to get started with investing, especially with a smaller amount like $10,000. Remember, focus on in-depth research, prioritize smaller, potentially undervalued companies, and always keep a long-term perspective. Extra professional guidance on investing $10,000 to become rich. Maintaining a simple and uncomplicated approach to investing is the most effective method for most investors. According to Robert R. Johnson, Ph.D., CFA, Chi-R, Professor of Finance at Heider College of Business, Creighton University, investors ought to allocate their funds to a diversified, low-cost index fund and stick with it through market ups and downs. Dollar cost averaging into an index mutual fund or ETF is an excellent lifelong strategy. Dollar cost averaging is a basic approach that involves putting a set amount of money in the same fund or stock on a regular basis over a long period of time. The great majority of investors should base their investment philosophy on the KISS motto, keep it simple, stupid. Regarding Buffett, Johnson stated, Warren Buffett has built an empire by investing in dull, staid businesses like See's Candies, Dairy Queen, and Nebraska Furniture Mart. Despite their unappealing appearance, these companies excel. Long-term wealth accumulation requires consistency and patience. Jeff Bezos reportedly asked Warren Buffett, you are the second richest guy in the world, and you have the simplest investment thesis. How come others did not do this? Warren Buffett said, because no one wants to get rich slowly. Buffett is referring to his idea of investing in solid firms and staying committed over time, allowing compounding to work its magic. Of course, this is just the tip of the iceberg when it comes to investing. There's a lot more to learn, and it's always a good idea to consult with a financial advisor before making any major decisions. Thanks for joining me today. If you enjoyed this video, be sure to leave a like and subscribe for more content on building wealth and making smart financial decisions. Let's keep growing together.